like to welcome you tonight. I was wondering as I stood up here and looked at the title, how many people would have had if we'd had some good topics to talk about? Wow, fiscal cliff. Fiscal cliff. How many have heard of that? If you haven't, you're living in a hole somewhere. Daily, hourly. What happened today? Last I read at 5:30 before I left the office. Perfect, thank you. Whoever said it's right, nothing. Wow. And is this important? Wow. Yeah, it's big time. Big time. I thought I'd start out for the first 5 or 10 minutes talking about a few things that a number of things that we know are going to happen in 2013. So I think we'll start there. About it. Yeah, 13 is wow. So that part's going to be tough to talk about. But we will put out a few suggestions. We'll put out a little bit of informed advice. But that is about all we know for 13. And that's all part of this fiscal cliff discussion. But as we go through it, we will figure out a few of those things to talk about. Thought this was fairly appropriate. Count it down. In fact, to have something passed by the end of the year with all the stuff they have to go through once they have a bill, December 18th, next Tuesday, is when they should have something in writing and something passed. So they get the bills out, vote on it on Friday, which is 21st. I don't think they're going to want to vote on Christmas Eve. And I don't think they're going to want to be there between New Year's and Christmas Eve. So when you're listening to mayors, when you're listening to the president, and they keep stalling their tactics, I think the 18th is really the last realistic day they have of getting anything significant on the table. So we'll talk a little bit about what that is. But what is the fiscal cliff? Can you find it in the dictionary? You can Google it. You can Google it nowadays, you have probably 12,000 hits. That's all it's talking about. But what is it? What's the fiscal cliff? First of all, I think it's a media name. Sounds dangerous, doesn't it? Okay? We're walking on that precipice and walking to the end, and we look over the end. What do you see? Look down, what do you see off that fiscal cliff? Use your imagination. When you look down, what do you see? Some taxes. I don't see anything. I look down there, it's just a big white space. How can we make decisions when we don't know what's going to happen in 13? When you're uncertain about something, doesn't that cause you a little more stress? We don't have an idea what's going to happen in 13. How many people think if the fiscal cliff just happens, in other words, nothing is done, how many are not going to be affected by it? Okay, if one person doesn't think he's going to be affected. We'll go through. There's some misinformation out there about who and who is not going to be affected by the fiscal cliff. But we'll talk about it. What the fiscal cliff is all sorts of things are going to happen on December 31st. Bush tax cuts expired. That 2% FICA barrel tax holiday that we've been enjoying for the last couple of years is going to disappear. State tax, what happens to that? Goes from a $5.12 million exemption down to $1 million. A lot of tax extenders disappear. A lot of our favorite deductions, the $250 teacher deduction, the tuition deduction, the state sales tax deduction, all those things disappear. Tax rates go back to the rates in 2001. They do nothing. Okay. Now this sounds terrible, doesn't it? We'll see how terrible it really is. Here's the components we've been talking about. You in the back probably can't see them very well. We're going to read through them fairly quickly, and then we'll dwell on them just a little bit so you get a feel for what this fiscal cliff is all about. Expiration of the Bush tax cuts. Saves $2.8 trillion over 10 years. circle in your mind that over 10 years part. Okay? AMT, the exemption for AMT expires, alternative minimum tax. Today, 4.4 million taxpayers pay the AMT. If they don't fix it, 32.4 million taxpayers will pay the AMT. And I'll guarantee you a lot of you will be in that category. What's the AMT real quick? You figure your tax one way, you figure your tax the second way, called the alternative way, and you pay the higher of the two. Okay? And you say, well, what are those two ways? That's a different section. We'll come back next week. Okay? But that's the theory on the AMT. Third item, payroll tax holiday. We mentioned that. And unemployment benefits in. Wow. That affects a few people now. Fourth item, reduce Medicare payments to doctors. That's called the doc fix. See, we have a couple doctors out here, and I understand that's about a 33% decrease in the amount of funds coming to the doctors. 33%, 1/3, if they allow that to happen. Automatic spending cuts. When they negotiated about 6 months ago, they said if we don't get anything done by the end of the year, defense spending gets slashed and some other programs get slashed. We're not going to spend that much money. Expiring tax breaks, that was the teacher deduction, the sales tax, the tuition, those type of items. The American Opportunity Credit for our tuition disappears. The debut of Obama surtaxes. Never thought that day would come. They passed them like in 2010. Now there's a tax rate increase on the high income taxpayers this time. So it'll kick in no matter what happens. It's already law. And the last item, interest. What's interest today? Fairly high, fairly low. What are you getting on your CDs? Yeah, the interest rates start going up as far as the deficit is concerned with $16 trillion in debt. That's scary. So these provisions alone total up to $8.1 trillion. If we do absolutely nothing, which they're very good at right now, that's the impact on everybody. $8.1 trillion. Now, what's being done right now? President Obama and Boehner are negotiating on that $2.8 billion. So what's going to happen? They're going to come down off that, aren't they? It's not going to be the full thing. It'll be something less. Let's just say it's half. The 1.7 AMT, they aren't going to let 28 million more taxpayers. The IRS changed their forms to the new law except for one provision. And that was the AMT. They said, we think you're going to pass something there, so we leave our computers set as if you're going to change it. So that's almost a guaranteed thing. It will not happen. $1.7 trillion. Okay. Where are you going all this, Trey? That's a lot of numbers you're throwing at me. The projected budget deficit for the current fiscal year is $1 trillion. You know what a deficit is? How much money does the United States take in each year? $2.5 trillion. How much do they spend? They don't write just a little overdraft. $3.5 trillion. Wow. So every year, our deficit goes up by $1 trillion. Remember that number from the previous page? I said 8.1 trillion over 10 years, that's 810 billion a year. What if they all just went into play? Congress did nothing. Would we even solve the deficit problem this year? If they did all of them, we're short. They don't get it. Because they're going to wrestle with that 810 and probably make it 450 by the time they're done. Okay. This is the scary part. Is it a fiscal cliff? Yeah, kind of, because it's going to kind of affect all of us in some way. 2% holiday, if you make $50,000, 2% of that's $1,000. Bush tax cuts, the person back here that said he wasn't going to be affected must not make $17,000. Because on the first $17,000, what happens if we let the Bush tax cuts expire? It goes from 10 to 15 on the lowest tax bracket. That's all of us. 17,000 times 5%, $850. All of us. And here's how the tax rates compare if they just let them expire. And the ones that get argued about, the ones you're hearing about in Washington are right here, right there. But everybody's affected. Here's the ones they keep talking about. Well, Representative Boehner doesn't want to go 39.6, maybe 37, maybe 38. So that's how the tax cuts will work. Okay, so we're going to plan now, if you're thinking, and say, okay, what if I think the Bush cuts are going to stop? Okay, tax rates are going to go up, I'm going to want my income. This year, stop one of my clients on the way in. Says, I'm going to recognize all my income this year. Is that usually your planning strategy? No. Well, the tax rate's going up, that's the way it would go. Now, if you think they're going to be extended, you do the reverse, right? You think they're just going to kick the can, which is what we're going to talk about here in a while, then you defer your income, which is our normal strategy, and turn our deductions in, and try to keep this year's tax bill down. Like we said, we don't know 13. That makes these discussions very difficult. AMT, alternative minimum tax, we talked about that. When does it apply? These four situations will be the ones that traditionally will catch people in the AMT. Large capital gains, a lot of dependency, a lot of little urchins running around the house. You got a lot of those, they don't allow that for the AMT computation. Make sense? No. Doesn't have to, they make the rules. Large state income tax deductions. If you have a big income tax deduction, you're going to be potentially subject to that. And then if you have high medical expenses. Those are the key areas that AMT will come into play. Okay. So if they don't pass that AMT provision, a lot more of us are going to fall into these categories. Okay. Payroll tax holiday, we talked about that. That expires at the end of the year. So we go back to 6.2% being withheld instead of 4.2. Like I said, you make $50,000, 2% of that, $1,000 more you pay. When I say you got to pay more, do you cringe a little bit? Do you say I don't want to? Yeah. All of us are going to have to at some point. We can't go on. We're going to find out here in a while. These numbers don't add up. They're not going to add up for a long time. Talk about the personal intentions that are going to disappear. Education credit is going to disappear. The $2,500 American Opportunity Credit goes back to the Hope credit with an $1,800 maximum. The Opportunity Credit had a 4-year period. Hope credit only 2. It goes back to the 2001 law. Okay, and people in the back can't read this very well, so we'll tell the story. I told you about the Obama surtaxes. Okay, now these are on more the high income taxpayers. If your adjusted gross income is over $250,000, okay, that's when these taxes have the potential of kicking in. You'll pay a 3.8 surtax on any type of investment income. Interest, dividends, capital gain, rents, royalties, any activity you're not participating in. The good news there is your $250 cutoff. Anybody under that is not affected by these. Okay. So now we have the 2012 where we are. If the Bush tax cuts expire, and then if they expire and the Medicare surtax is on there, now what are we looking at for the top rate for a high income taxpayers? 43.4%. Last year it was 35. 20% increase. And we kind of say, the survey today said 67% of the people said let them pay. I'm surprised it wasn't 98% of the people didn't say let them 2% pay. Okay. That's where we're at. That's the type of increases that are built into the law if nothing happens. That's just the way it happens. What type of stuff was not subject to that surtax if you're over that level? Any salaries and wages, IRA distributions, income from your trades or businesses, none of those items are included. Tax-free income, and any income you pay self-employment tax on, or anything you're working for. I'm not going to dwell on this, but those that are not covered by that 3.8 surtax. A lot of talk out there about who has to provide insurance to the employees in 2014, a year from now. Only employers that have more than 50 employees. If you have more than 50, you have to provide health insurance to your employees or you pay a fine. What's health insurance run nowadays? Let's just say family. Family coverage. 10, 12,000 easy, right? I see my insurance guy up here, correct? That close, ballpark. All right. Your employer has the option of continuing to pay that, 10 or 12,000 if he's paying the full family coverage, or paying a $3,000 penalty per person. What's he going to do? If it's a financial decision, you know what he's going to do. If he's competing with other employers, he might have to go the other way, but that's the silliness of some of this law. There's going to be a lot of people paying that number. Saying, go out and find your own insurance through a subsidy possibly, and then go to the state agencies. A lot of the states are going to have their own insurance departments issuing insurance. But that's significant for the large employers. They have a serious decision to make. And I've talked to a couple of them, and I know that 3,000 sounds pretty enticing. Okay. So that's the fiscal cliff. All those 7 items I listed up there coming together, and everything happens on December 31st. Okay. I have my own definition of fiscal cliff. Mine, I didn't read it, I didn't make it up. We mentioned it real quickly. $16.3 trillion in debt for the United States. 16.3. Example. If we try to boil this down into terms for an individual, this would mean an individual would make $25,000, would spend $35,000, and he'd have a credit card debt of $167,000. That would be the picture of an individual operating like the country does. Wow. $167,000 in credit card debt. Now, okay, so let's look, how do you get out of that mess? Not many hands going up, because usually it's early your account, so you got the end, you can figure it out. They can't eliminate the current year's debt. We just went through it. They let everything expire, did no negotiating, couldn't get there. Okay? So you listen to this talk and fiscal cliff, and you see them talk, and no progress made. Wow, that's a lot of things to worry about. Okay. We're going to get some of those entitlement programs? Have to. You're looking at me and saying, I paid into my Social Security all my life, I deserve every dollar back I got. How can I argue with that theory? But I think what you're going to see someday is a means test. If you need it, you get it. If you have enough income otherwise, you don't. You say that's not fair, you might be right. Something has to happen. Something has to happen in these areas. And when you sat there and said you didn't want to pay any more taxes, you have to. I've got taxpayers that make $85,000, $90,000 a year writing checks for $5,000. I'm not complaining about that, I'm doing my job. I'm taking all the credits for them I can and doing the best job I can. Is that fair? This is why we have these problems. I think the one that kind of resonates is $2.5 trillion of income, $2.5 trillion of income, and $3.5 trillion instead. How can you do that? How can you let it happen? All right. So there's my fiscal cliff. Because this one I don't have an answer for. I could at least help you on the fiscal, what they call the fiscal cliff. This is my big fiscal cliff. Okay? Thought I'd write it out for you so you can see it. 16.361 and 9 zeros. Okay? Last year the deficit was 1.1 trillion, so that added 1.1 to that. This year it's projected to be 1 trillion. I heard the first quarter estimate of 292 billion. So if I round that to 300 billion, take it times 4, that's 1.2 trillion. So they might be a little light on the estimate. But how's that convert down? That's $84 billion a month. $2.8 billion per day. $1 billion per day we go backwards. $117 million per hour. For the period of time you're going to sit here, we're going to go backwards another $117 million. 1.95 million per minute, and 32,500 for every second we sit here. The deficit goes up by that much. Wow. This is why it's going to be more serious than just getting the fiscal cliff discussion resolved. We've got a lot bigger issues. All I wanted to do in this first 20, 25 minutes was paint the big picture. If you don't see the big picture, all this other little stuff that you hear on the TV and stuff, you're going to hear them wrestling, and they're going to end up with, like I said, probably 400 billion of cuts. That's half of what they need just to balance the current year budget. You just shake your head every time you hear it. So I hope that was meaningful, to at least paint a big picture of what we have, why you're here, why you decided to come to Fiscal Cliff instead of go Christmas shopping. But at least you kind of hopefully have a little bit of understanding of what's going on. Here's some other stuff that's on the table that I really don't like to see up here at all. Exclusion of employer health contributions. So either the employer is not going to get deducted, or you're going to have to pay tax on the health insurance paid by your company. These are things that are getting serious discussion. Mortgage interest deduction, maybe get rid of that. Maybe limit that. That's just fun stuff. This is stuff this is you and me now. Pension plan contributions, excluding the deductibility of it. Well, you say, oh, Gary, you do that to your Roth IRA anyway. Well, for you that have Roths, I still have a lot of clients that make deductible IRAs and 401k contributions. What if they say you couldn't deduct me? Earned income credit, child tax credit. That's another big one that just happens. If the fiscal cliff occurs, you get $1,000 per child today, $500 next year. That's major for a lot of my clients. Deduction for charitable contributions. Limit those, cap those. You're hearing a lot of this talk. All right, now we're going to go into some substance items. Okay? Things that affect you and me, things we can still do before the end of the year. Okay? But to start out, I want to make sure we clarify a point, because a lot of times my clients get confused with deductions and credits. Okay? What's a deduction? A deduction comes off your income before we figure the tax. Okay, so we talk through the rest of the night. Deductions reduce your income, then you figure your tax. A credit comes right off the tax. So which is better? Credits are neat. Or education credits we just had up here. That comes right off the tax after you figure your tax. The other thing, when we start talking about itemized deductions, for those of you novices that don't quite understand how your tax return works when you itemize or not, a lot of people say long form versus short form. Okay? If you do quote unquote long form, if you itemize your deductions, for a joint filer, you have to have those total up to more than 11,900. If they don't, you get the 11,900. If your list totals up and it's larger than 11,900, you get the larger number. So you're always going to get 11,900 on a joint return. Okay? And you'll see the importance of that as we go along. Okay. First of all, what's capital gains rates this year? We know. Maximum rate you're going to pay. 15%. Okay? What happens next year? Goes to 20 if there's nothing that happens. That's going back to the Bush rule. Okay? So this year, dividends and capital gains are taxed the same. So dividend income you receive for the top 15% for the highest four tax brackets. That's the most you're going to pay on any dividends. If you're in the two lowest tax brackets, what's the rate? 0. Okay, keep that in mind for a minute. What happens next year? If nothing happens in the law, if Bush tax cuts expire, dividend income now becomes ordinary, not taxed like capital gains. So now whatever bracket you fall into, somewhere between 15 and 43.4 as opposed to 15. Significant. Capital gains tax rates, we said they're the same as dividends. Top 4 tax brackets, maximum 15% this year. What's the last sentence say again? If we're in the lower 2 tax brackets, how much tax do we pay on our capital gains? 0. Okay, well, Gary, what's that mean? You say all that stuff. What's that mean? We know next year capital gains rates are going to go to 20. And if you're over 250, you get that wonderful Obamacare surtax at 3.8. So really the difference for the high income taxpayer is 15 and 24. I've done a lot of planning for people selling a lot of stuff this year. Here's my example. Let's say we said the 2 lowest brackets got 0% tax. The 2 lower brackets, taxable income is $70,700. I add back my standard deduction, I add back my 2 exemptions. That should be 19,000, not 1,900. No, 11,000. Should be 11,900. The total's right. Okay? $90,200 is my amount that I could sell some capital gains at, include that much in my income as long as I didn't go that amount and pay no tax on my capital gains. So let's just say you were sitting out there and you got $50,000 of other income and you got a bunch of stocks yet that have some gain in them for this year. You could sell $40,200 of gain on those stocks and pay 0 tax. That's the lowest I can tell you. Okay. So you can load up the difference between what all your other income is and that capital gain income. If we stay under $90,200, no tax on capital gain. All right, let's talk to our business friends out there a little bit. We still have good news on writing off our assets. Okay, those of you that are in business, well, you hear expensing, you hear section 179, you hear bonus depreciation. For 2012, we're still okay. 2012, we can write off the first $139,000 of assets we buy. It's a big number, but look what it was last year. You could write off the first $500,000 of assets we buy. But more devastating yet, what do we have for next year? $25,000. So we have some income this year. We'd like to get some offset to that. We'd like to upgrade our equipment. Which year are we going to do it? Let's do it this year. We have a lot more room to do it this year. But our room is really limited starting in 2013. Bonus depreciation. This kind of all started back on 9/11. In 2002, I believe, they said that was a devastating event. Our economy crashed. We're going to let people write off 100% of the purchase price of their assets. I just said, what? 139,000 over on the other side. This is 100%. The only qualification here is a stickler. It's got to be new. But back between September of 10 and December of 11, you could write off 100% of any new asset. I had a phone call today from a client. So we're having a good year. Okay. We're buying an airplane. So, what's the airplane going to cost? $4.4 million. Is it new? Yeah. How much did you get to write off this year? $2.2 million. Plus, depreciate the other $2.2 million over 5 years, so that gives him another 10%. He gets to write off 60% of the $4.4 million this year. What will you get if you did it January 2nd of next year? Regular depreciation on this airplane. This is major stuff. Makes people do things. Why is that in there? Did that stimulate the economy when we bought out the airplane? It's supposed to have. That's why this is here. How's the economy doing? There. Might this get extended? Might the section 179 get extended? You gotta think so. My best guess is this is going to disappear, but I think your 179 is going to stay at 139. That's Gary's guess. Okay? But I don't think they want to take it all the way down to 20.